हाय फ्रेंड्स, दिस इज सी हर्षित अग्रवाल। होप आप सब अच्छे होंगे, मैं भी अच्छा हूँ। सो टुडे वी विल डिस्कस अबाउट अ टॉपिक दैट इज़ वेरी प्रिवेलेंट एंड वेरी इंपॉर्टेंट एंड इट्स वेरी significant also, that is audit of revenue recognition. Yes, you heard it right. So what are the auditing perspective in respect of revenue? So we will straight away go into that topic, that is audit revenue. Basically, first of all, we will understand why does it matter. Why does it matters a lot in the auditing world? Because revenue is one of the most critical financial statement line item, FSLI, which is a key driver of our profitability for the perspective of the financial statements, because of its significance and susceptibility to manipulations, because it can be manipulated in many fraudulent manner and in a number of ways. Revenue recognition is often considered a very high risk audit area. Basically, some of the prevalent key risks which can be associated with revenue can be categorized as basically premature revenue recognition. Revenue recognition basically boils down that it's recording the sales before the control of a particular goods and services is being transferred. Basically, we records the revenue when the control of the good and service is transferred to the buyer, but until and unless control is transferred, sometimes it happens that before the control of goods and services is being transferred, it gets recorded in the books and the financial statement. So that is one key risk pertains to premature revenue recognition. Next, we have fictitious revenue. That is very obvious and it's known to all that fictitious revenue is very important. Fictitious revenue is one of the key risks, that is inflating sales throughout the financials through the fake invoices on round tripping. Then we have cut-off errors. Recognizing revenue in the wrong accounting period. It might should have been recorded in a particular financial year and a particular period of time. Might be whatever sort of cut-off and the dates the particular organization is taking around, but it has been recorded in the wrong accounting period of the next billing cycle. So it is one of the error, that is cut-off errors. Then we have complex contracts. It boils down to multiple performance obligations, variable consideration, or discounts or rebates. Basically, two contracts have different TNC, terms and conditions, or different performance obligations to perform independently, but they have been clubbed in such a manner that it makes a complex contract for any person to understand, and it just makes a sense of recognizing false figures in the financials and inflating or basically inflating revenue. What the purpose? So yeah, inflating revenue. Then we have channel stuffing, pushing excess products to distributors to inflate the particular sales. Principal versus agent risk. It's very obvious that misstating revenue when the entity is an agent, it's not a principal. When it's not in the position of principal, it's being and merely acting as an agent, it's very easy to uh, misguide the sales figures. And what are the auditing procedures we should take as an auditor to audit the revenue? First of all, we have to understand the revenue streams and contracts. What are the different sources of revenue for a particular organization in perspective of the revenue? Review the accounting policies and according to the IFRS 15 or NDS 15, depends upon the gap on the policies which the organization is following, accounting standards accordingly. So ASIC 606 application is also invited. Then we have test internal controls. First we are having understand revenue streams and contracts. Then we have test internal controls, that is walkthrough of the sales process, how the sales process is initiated from the very onset, from the starting to the end, who are the personnel involved and what are the different software and the different approval authorities involved in recognizing the revenue. That is walkthrough of the sales process, segregation of duties and approval mechanisms that I have already talked about. Third, we are taking care of cutoff testing. Yep. Verify sales transaction around the year end to ensure proper recording of revenue. So we can take it that if a particular year is closing, then we can take the revenue sort of after 1 year, or sorry, after that particular financial year end, or before that financial year end, before 1 month. So we can just categorize our cutoff testing in such a manner that we are able to just tackle all the revenue figures accordingly, and we can see that yeah, it has been recorded in a correct accounting period and it's not misguided. So cutoff testing. Then we have substantive analytical procedures, that is SAP, that is very under basic, and we all know about that. That is basically boils down to comparing the revenue trends year on year, or financial ratios we are calculating pertains to revenue, and we are catering to margins and ratios, which I've already talked about with the industry benchmarks. And we are doing the different analytical procedures about the revenue testing, and vouching verification, it's very prevalent. Yeah, sorry, next point is about that only. Vouching and confirmations, basically verifications, confirmation, that we are matching the invoices with the delivery notes, shipping the documents and customer confirmations, data confirmations. And yeah, it's sort of vouching the invoices with the relevant amount which has been banked, and which has been shown in month wise, or in the whatsoever period the revenue is recognizing in the financials. So that is all about vouching and verification and confirmations. That is, next we have contract testing. It is just a extension of vouching and verification, that we are examining the sample contracts for multiple performance obligations. Obviously it's not possible for a particular auditor or any individual to cater to all the invoices, particularly if organization is dealing with 1000 invoices. It's not humanly possible to see and check the all the 1000 invoices. So what we are applying here, we are applying our sampling testing. Out of 1000 we are checking basic number of samples, depend upon the different sampling processes, haphazard selection or blockchain selection, or any selections techniques. So targeted testing, so we are following any sort of sampling technique, and we are just picking up the samples and we are doing the testing accordingly. So it's contract, we are examining the sample contracts for multiple performance obligations for unusual items. Next we have journal entry testing, which is very prevalent, and it's very important to just check the revenue recorded is being appropriate and correct or not. It's just that it's sort of checking system. Journal entry testing, how the journals are being recorded. We are checking for the unusual manual adjustments to revenue near the period and close, that any unusual entry has been passed in the near the period end, so inflate revenues or other things. So it's very important, we have to check journal entry. So these are the some pointers which I would like to share with you according to revenue, and I hope it helps. Yeah, major key takeaways is that revenue recognition is a fraud prone area and fraud prone FSLI and judgment heavy area, so we have to very cautious and keep our professional skepticism on every time. Auditors must apply professional skepticism, especially around the year end, and robust and strict procedures should ensure revenue reported should match and complete, accurate and compliant with the different accounting standards which the organization is following on. So these are the some of the pointers which I would like to share with you regarding to revenue, and I hope you have learned something out of it. And if you have any additional points which you would like me to touch upon, so I am feel free to just comment and let me know how does it find this video, and have you learned something out of it. And I will see you in the next video with some interesting topics about any other topic, might be auditing, accounting, any other topic you feel like. So just keep smiling, spread positive vibes, do your hard work, keep shining and keep dreaming. Bye bye, signing off. See Harshit Agarwal.